My name is Ivan and I'm a host today's meeting. And as I said before, we got two projects today. First of all, we got Akshay, CEO at Autonomint, and Jonathan, head of marketing at Satoshi Port.
So I'm actually not Jonathan, I'm JB Carthy. I'm head of marketing at Satoshi Port. Jonathan is head of communications. We're looking to build the first trustless Bitcoin prime brokerage. Essentially, we're looking for Bitcoin holders to be able to come unlock liquidity using their native Bitcoin across the entire DeFi ecosystem, cross-chain, Solana, Ethereum. Anywhere there's vibrant DeFi, we want to be able to connect Bitcoin holders with that. Currently, I saw recently there's only 0.33% of Bitcoin unlocked in DeFi. So there's almost like a $2 trillion opportunity for people who solve this problem or make Bitcoin holders feel safe accessing liquidity to bring it to DeFi. Essentially, I'll bring this down. We're looking to, as I said, build the first Bitcoin prime brokerage. So we're looking to unlock all that liquidity, connect people with popular products and projects. Essentially, since we are the layer, we are profiting from all this transaction volume that we're facilitating, as I was saying, like almost $2 trillion of liquidity with Bitcoin in its current market cap. And there's no one currently we see building what we're building. People are trying to build their own suites of products, their own blockchains. All we're doing is giving people the tools to unlock their Bitcoin liquidity and connect them with all the existing popular apps that exist anywhere they may be being built. Yeah, I think I covered all this. Bitcoin-backed financial, trustless borrowing. Our V1 is going to be Bitcoin, but we're going to be looking to integrate other assets, Bitcoin to DeFi effortlessly. And we're built on Near, so we're leveraging Near's industry-leading techs, chain signatures, omni bridges, and TENS, which allow us to build this. Currently, as I mentioned, Bitcoin holders are segregated from DeFi and they have to go through wrap variations. They have to use centralized entities to borrow against a Bitcoin. So we're solving that problem by allowing native Bitcoin holders to access liquidity and connect directly with DeFi without having to give up custody of the Bitcoin. As like the popularity of things like Celsius and BlockFi demonstrated, there's a huge appetite for these sort of services, but there's huge problems also associated with centralized custody. And obviously Satoshi Port in the image of Satoshi or in the ethos of Satoshi aligns with the decentralized permissionless nature of blockchain and DeFi. As I mentioned, powered by Near, one of the best places or homes probably to be built to build like an omnipresent protocol. The intents allows us to bring native Bitcoin into the chain without the traditional bridging and custody risks. OmniBridge allows us to send liquidity out to many different chains quite easily, and chain signatures makes it efficient to conduct transactions cross-chain, empowering Bitcoin holders with instant DeFi access, just a tagline. Simple three-step process: deposit Bitcoin, borrow USDC, explore all the apps. Like there's nothing more complicated about that. Key benefits, I think I already touched on all these, but self-custody, flexible and cost-effective borrowing for Bitcoin holders, no KYC, and extensive suite of apps that people can connect with immediately and permissionlessly. We're not trying to build our own suite of products. We just want to connect, unlock that liquidity and connect with all the existing apps that exist. We are going to be launching the SP token. So there's three aspects: deflationary rev share. Essentially, when we generate revenue from the platform, we're going to use that revenue to buy back SP token and distribute it so that stakers earn distributions from protocol fees. Governance stakers are going to be able to participate in governance to shape the future of the platform. And we want SP ultimately to hopefully have enough value to be able to be used as a form of last resort collateral on the platform by generating enough revenue. Go to market and have a complete set of apps available for people to connect directly with. Have a points campaign that incentivizes people to come and deposit Bitcoin and supply stablecoin liquidity to the platform so that there's enough liquidity for people to be able to use it effectively. And obviously, as any project, community growth and marketing is vital. So we're looking to build a robust user base by letting people know we exist and letting people know why we're useful. Roadmap, we're looking to be on mainnet by the midpoint of this year, by Q2 2025. The points program coming shortly after that, leading into TGE, and then we just want to keep building. Adding more assets, more revenue streams, more integrating with more platforms directly into our hub. I see it ticking down here. But yeah, becoming a $1 billion protocol. BlockFi and Celsius were valued at over 30 billion at their peak. we just want to capture some of this liquidity, this volume, this appetite that's obviously there to borrow against Bitcoin and use it for liquidity, but does not currently exist or come with significant risk. Yeah, there you go. We have, that's it. We have grants, we have expertise, we have the design made, and here is the team. There you go. That's I think I covered most of the stuff. Like I don't think the last slides were anything that I hadn't already covered.
Yeah, absolutely. You can certainly talk more and expand the topic in the questions. Definitely there's gotta be something. So guys, feel free to leave your questions to JV in the chat section, or just raise your hand. Now to Q&A, and got a raised hand from Lami. Thanks for letting me know. Happy to see you, Lami. Please go ahead.
Nice presentation. Thanks for having me, Jim. I would like to ask, from what I've seen so far, from what you have said, talking about Bitcoin, for people who are not holders of Bitcoin, how can they benefit from the Satoshi Port platform?
People who are not specifically holders of Bitcoin. So the first problem we're obviously looking to solve is this, as we mentioned, $2 trillion problem, where there's only a certain amount of Bitcoin used as liquidity in DeFi. We think it's been proven there has been a more significant appetite for it, with the success of things like Celsius and BlockFi, until maybe they were not successful anymore, but are proved the structure was just not sustainable or profitable, or not transparent. But essentially, we're first of all targeting this significant problem. So really, our V1 of the platform is designed specifically to tackle that. For people who aren't Bitcoin holders, they can deposit stable coin liquidity into the platform for Bitcoin holders to borrow against. And then obviously, as with any lending platform, they earn from borrow rates. So Bitcoin holders obviously pay an interest rate, and stablecoin lenders obviously benefit from this. And then also people can buy the SP token or own the SP token, and they are going to benefit from rev share and profit share on the platform.
Meanwhile, we've got another question from the chats. Let me read that one. So what's been the most surprising feedback from Bitcoin holders since you launched this trustless prime brokerage?
So we're currently in the early stages, pre-launch, so we haven't actually launched, but I suppose reaching out people, doing market research, we did our putting the feelers out, and before we decided to build this, got in contact with maybe different conferences, different networks where there's a significant amount of Bitcoin holders, tried to understand whether there was going to be a demand for a service like this. And we did, from early indications, it appeared to be like that. There is an appetite among Bitcoin holders, or at least the ones that we surveyed, that they would like to unlock the liquidity of their Bitcoin in some way. But obviously, things like bridging risks, custody risks with things like FTX, BlockFi, Celsius, all impact their decision to let go of that native Bitcoin. So we're just looking to tackle that problem, and we believe from qualitative research, we believe there's a good appetite for that.
Okay, hopefully that answered the question. Thank you, Alice, for the question, by the way. And meanwhile, I've got one question. So would you explain us, there's been a slide regarding team, but we didn't have time for that. So could you elaborate on that regarding the team? Yeah.
The team. So I'm JB, head of marketing. I have probably about 5 years of experience in the space. I run a marketing agency. I've worked with Levana, Amulet, Helios Staking, now working with the Ruggiero Network and Satoshi Port. So essentially I have a significant amount of experience working with DeFi protocols and building community, growing attention, bringing them to market. Jonathan himself is a serial entrepreneur. He is our head of communications, and he has 20 years of experience in the tech sector, has founded many companies, and he was head of business development at Starkware for a while as well. So again, and Lineware Capital, an investment firm, he was involved there as well. So again, significant experience on both on just the general technology front and in terms of specific Web3. Built out, or had a huge part in building out Levana Protocol, which have handled over 4 billion of perps trading volume on Cosmos, what is a difficult environment at the moment in that space. Francisco Melo is our designer. He's great guy, lots of experience in UX UI design, and Carla, head of operations, keeps everyone on the straight and narrow, keeps our focus where it needs to be. And Michael Belote, head of finance, has been working in this space in terms of like designing tokenomics, organizing treasuries, and making sure like things add up on that side of things for like many years. Like I think five plus years he's been working on as well. So combined, like we have probably 20 plus years of experience at least between us in what is a pretty new industry. So yeah, we've all been around the block, all survivors of the PTSD and trauma of the last of the last period of time, you know.
Yeah, I can imagine. And besides, let's talk about the competition. So who are your main competitors in this field?
We don't see anyone doing what we're doing. Like we have a very simple go-to-market. We have a very simple call to action. And we don't want to overcomplicate it. We actually think like in some instances, complexity and unnecessary complexity is a better way of putting it. Sometimes dilutes the value of protocols. So we're going with a very simple call to action, a very simple value proposition. We see this massive problem where there's a huge amount of liquidity to be unlocked. We think there's a reason it's not being unlocked, which is Bitcoin holders are reluctant to let go of their native Bitcoin in terms of bridging and custody risks. And yeah, like we think there's, by even capturing a fraction of that volume, and from our research and qualitative research, we understand there's appetite for it, and we think this can be quite profitable. Like, you know, so we're not looking to dilute it with complexity, add in unnecessary bells and whistles. It's literally just Bitcoin holders access DeFi wherever it is as easily as possible.
Yeah, that's pretty cool. Sounds nice. Okay, so that's all the time we have for Satoshi Port. Thank you, JB. It was a pleasure having you, and wish you best of luck with that.
Appreciate it, man. Thanks for having us on.
Yeah, and guys, reminding you, you can find all the contact details in the chat, so feel free to get in contact with our speakers. And yeah, we're moving on. We got a second project to present the deck, and it is, yeah, what do we have here? Autonomen representing Akshit. So yeah, thanks for coming. Hi, passing the mic to you. Yeah, whenever you're ready.
So yeah, hi guys, my name is Akshit. I am the co-founder and CEO of Autonomen, and we have built a stablecoin specifically made for the derivative industry. As of now, there is around $39 billion worth of excess collateral which is sitting in the lending protocols. The reason this excess collateral is there because there is a high demand of stablecoin borrowing across DeFi. But if we see of the existing utilization ratios across the major DeFi protocols like MakerDAI, Angle, Morpho, Aave, it's above 200%. There is a high capital inefficiency in the space, and the reason there is high collateral sitting because people are worried about liquidation risk or penalties, and they would like to keep a stable buffer so that they don't get liquidated. Also, the existing mechanism doesn't have crypto price hedging mechanisms because their business model doesn't support that, also because of the high cost of that as well. So we have built a mechanism that will unlock this excess value. So going through the existing stablecoin design, if a user comes and deposit like $1,000 worth of crypto asset, they are able to mint around $600 in stablecoins. And the usual strategy is that they would be deploying that stablecoin across money markets to capture the yield basis spread. That is about the majority of this $39 billion worth of market, which is just the yield basis spread which is happening across markets. Our approach is completely different. And what we are doing is that users can come deposit $1,000 in collateral, and they can mint up to $1,000 in stable value itself. But along with that, we are also providing some kind of hedging protection also of that collateral volatility. And then people can go and then they can deposit their stablecoin across derivative platforms like Binance, Deribit, or any others, and capture the spread across option fees, which is the arbitrage across that. So this is a usual mathematics for that. User comes, he deposits around 10k worth of any kind of ETH or LRT. They would be able to mint around 80% worth of stable coins, and rest 20% they will be getting a price decline protection. One of the unique things is that they are able to get a very cheap hedging protection as compared to what they are going to pay in any other of the derivative platforms. That is one of the unique value propositions which we are offering. And user wins in every scenario, whether it's a price has declined, then also they have a price decline protection. Even if the collateral is liquidated as well, then also there is no liquidation penalties. And if the price has increased as well, then also they are able to retain the collateral upside. The reason we are able to provide this cheap hedging, which is not existing across any other protocols, is through a unique primitive which we are launching called as DCDS, which is decentralized create default swaps. It allows us to provide about 50% lesser option fees cost as compared to what users are required to pay across others. And there are scenarios where users don't require to pay any upfront cost for this hedging. Along with that, we are also integrated with perps as well. DCDS is our internal hedging mechanism, but perps is external, and we utilize both of them to create a very robust hedging mechanism so that we can hedge the volatility of the crypto asset which is backing our stablecoin. Optimism has validated our concept, and they have given us a 110k plus grant. We have been audited by Sherlock. Around 350 plus auditors have done that, and we have received a 50k grant from Josian as well. We have received a 300k fund commitment from YardHub and backing from Mod L2, which is a super chain of Optimism, plus at least 500k worth of commitments from LPs for initial launch of our protocol. In terms of go-to-market, we have access to token-gated groups of Mod token holders, plus partnerships across Mod and Optimism with a couple of projects, which gives us access to 20k plus users and around 100k plus users access through our partnership with Cookie Community, which have a good amount of KOLs and their own marketing tech integrations, which allows us to target people there. Just to showcase the yield which you can accrue on USD, we ran a simulation over the past 3 months, and the net CDS yields, which for people who are depositing in CDS, were reached up to 64%, which is 10x higher than any other competitor out there in the market. This of course comes with some volatility risk, which can be seen here, but over the long period of time, this is the amount of yields which can be accrued. The business model is quite straightforward. Users who are minting stablecoins, they would be required to pay borrowing fees, and CDS users, we will be taking whatever yields they are accruing, we will be taking a 10% cut from them. As of now, we are raising $1.15 million equity plus token. 300k has been committed, and this will be utilized across security audits, UI UX marketing, and risk management and legal areas. We are already audited, and we are just onboarding, doing the launch this next month and beta launch, and by Q2 we'll be doing the mainnet launch, and by Q3 we are anticipating TG when we have reached a bit amount of TVL. And this is me. I have 7+ years of experience, and co-founder is the head of technology across previous organizations, and we have 3 more people in the front-end blockchain and back-end area. Yeah, so thanks. This is us.
Yeah, thank you, actually, for your time. Now we have Q&A section. Yeah, guys, feel free to leave your questions in the chat as well, or raise your hand. Meanwhile, be sure to check out all the links in the chat section. You can find TG and email as well. And yeah, we already received one. First, it goes, being backed by Optimism and other notable grants, what are the next steps for you in terms of growing the user base and ensuring liquidity? Yeah, thanks for the question.
Yeah, thanks for that question. Definitely liquidity is one of the main things which we are kind of targeting now, and our partnership with Mod has given us access to some liquidity commitments from their end. All the users who are participating, who have bought this Mod token, which is have around more than $100 million worth of market cap. All of these users Mod would be heavily marketing our product to them, and that will be giving access to some of the liquidity from their end. Plus our partnerships with some Optimism projects, they would be heavily incentivizing our liquidity pools, which would be launching. That will give us some kind of much more higher participation. And the third is whatever investors we are reaching out, and we are reaching out with touch with hedge fund managers as well, who can probably deploy initial liquidity. We have already got around 500k worth of commitments, and we are targeting more and more, which can be utilized in initial stages. So that's for the first quarter in the beta launch, that's the target, whitelisting users and getting more and more liquidity, so that around $10 million worth of liquidity we have in the beta.
Thanks for answering that one. We got another one in the chat as well. With crypto volatility being such a big factor, how do you see your DCDS product evolving as the market matures?
So we ran this DCDS product is primarily suited for both bullish and bearish scenarios. If you see all the stablecoin protocols, the prominent of them being MakerDAI, which is Sky now, there people are minting these stablecoins because they are looking to borrow that and supply that across another markets, because there is a demand for leverage. Demand for leverage is already there, only there when there is a bullish market. But for our product, we are also hedging that. So, and the demand for volatility hedging is always there, whether it is bullish market or bearish market. People are always playing with derivatives. So that gives us the cushion that this DCDS product will work both in the bullish and bearish markets, and people would be paying these option premiums. And one of the cool things is that what MakerDAI did for the stablecoin industry, they basically did that people are able to borrow cheap credit in DAI, and then they can lend it across money markets, thus capturing the arbitrage. We call ourselves the MakerDAI of the derivative industry. People would be able to hedge cheaply through our protocol and then go to other derivatives and open positions there and thus capture the spread. So this is kind of a new meta which would be launching, and yeah, so we are also excited how this will go. We have done simulations, and those simulations for the most volatile periods of the previous 6 months when the ETH price reached a high of $3,900 and ETH price dropped to around $2,200, and our protocol worked smoothly across that.
All right, great. And I've got a question as well, so let me address this one. So how will you plan to attract users to the platform, since there is a pretty tough competition in this field, in the DeFi and stablecoin project? So what's your strategy in that area?
So I have been talking to a lot of people, traders. I have been doing all of that organic growth, reaching out to Twitter people and DMs, and I have done some discussions. And whoever is a trader or a derivative trader, he is very much excited about this. So according to me, this is purely a word of mouth play. Initially, I see that if I am able to onboard 100 plus users initially, we have 1,000 plus waitlist signups, but some of those I'm not sure whether those are serious or not, but some of them are serious. So, but I think even if I am able to onboard 100 plus users, the product is good and they would be able to spread the word across, and this will work fine because there is nothing like this existing in the market, and it's quite a risk-free play for them if they care about certain parameters. Yeah, so that's a strategy. Plus, yeah, whatever funds we raise and partnerships which we are doing, we are trying to keep our CAC as much low as possible by already relying on some of the people who are already like blockchains who have good marketing firepower, so that we can leverage that and onboard users.
Okay, gotcha. And I barely missed another question in the chat. So what's the biggest challenge you faced in getting both investors and users to trust a completely new decentralized financial product? That's a good one as well.
Yes. So frankly, both me and my co-founder isn't very much known in this space. We are both from India, and I've been working earlier in a permission blockchain industry, and I've been ahead of crypto growth exchange, but we haven't had access to hedge fund managers, any of that asset managers or something. I'm not from that industry, but I think people have been coming and supporting us. Optimism listened to us, and then they validated and they liked it. They supported us. Mod also gave us a grant. Josian also liked us. They gave us a grant. Then I talked to one investor. They also have given 300K commitments. So I think in this case, I would say the founders are not the big thing, but I guess the product is the big thing. That's what people are coming and they are relying us on. And so by all the usual investment thesis, which is early stage, that you should rely on founders. Here we are not big short guys, but we are ambitious guys, and we are trying to reach out to as many people and see what can be done.
Okay, thanks. And yeah, guys, we have time for the last question. So if you have anything, just feel free to post them in the chat or raise your hand, or I've got one stored. So yeah, I'd prefer your questions. So yeah, just wait a couple of seconds. And if you don't have any, so finalize with my question. So in a nutshell, basically, what makes you different, sets you apart from other stablecoin projects? So can you in a nutshell, for those who don't know you, put it in a small sentence, but finalize. So what do you guys represent, and what your future goals are? What your vision in this crypto field?
So the unique things is that as of now, no one has been focusing on derivatives, in enabling stablecoins through derivatives. How I say that is, people have always assumed that there is a hedging cost which is always there, and option premiums, whatever these have to be paid, but no one has tried to build a mechanism through which this hedging cost can be lowered. So this is the first time which we are doing that, because the big good thing about DeFi is that there is a composability angle to this, and there is stable coins here, which is a on-chain hedge. If we combine stable coins with derivatives, then we unlock some value which is definitely would be liked by the users, and I haven't seen any protocol doing that, so I see some good traction for that. The vision mission is simple, that we want to, initially the target would be for the derivatives industry, but as more and more TVL gets unlocked, then we would be able to unlock higher use cases, probably for the people who wants to, for the lending industry, and of course payment space as well. And we are already a multi-chain protocol. We are built on top of layer 0, so optimism mode chain are first, but we will be deploying on base as well. We will be able to do that very quickly. Yeah, so team is quick and efficient, and we have designed the architecture in a way so that we can scale very easily as more and more opportunities come. I guess that's what, when the market is good, then that's what matters, and I think we would be able to do that. And vision is definitely becoming the one of the biggest stablecoin protocols, and basically become a de facto protocol for the entire derivative industry, which utilizes us.
Yeah, thank you, Akshit. Wish you best of luck with you with that project. And thank you for being here, for your time. It was a pleasure hearing you out. And yeah, that was Akshit from a project called Alto. And yeah, this is the second project. The first one was Satoshi Port representing JB. And if you guys want to pop out and be our next guest in our collective calls, just feel free to fill the form for participation. And we're happy to collect some feedback from you. So please do that as well. And I want to say huge thanks to everyone participating, to our guests and participants for your questions. It was a lovely chat. So see you next time on Tuesday. So yeah, bye-bye.
See you later, guys. Thank you very much.
Yeah, appreciate that.
Thanks.
Goodbye.